Coming up on the SBS On The Money podcast, Donald Trump's reciprocal tariffs. It increases the chances of a US recession, so too an imminent interest rate cut here in Australia. But what does it mean for investors? All of that and more next. Hi everyone, it's your daily 10-minute business and finance news wrap for this Thursday, the 3rd of April 2025. Let's go straight to the Australian share market now, which was sold off at the open, the ASX 200 down 2%, but slowly recovered to be down 0.9% at the close. Investors are contemplating what Donald Trump's reciprocal trade tariffs will mean for shares. Listed companies too are waiting for even more details on the move to apply a 10% tariff on Australian exports to the country, more for some others. So, for example, in a statement, hearing implant maker Cochlear said there are complexities in understanding the application of the new tariff and is expecting further detail next week. Small appliance maker Breville, which manufactures most of its products in China and sells around 45% of them in the US, says it's diversifying its manufacturing base, but input costs will likely rise next year. And others like CSL, which operates in the US, said at this stage, pharmaceutical products are not subject to the reciprocal tariffs, but it's continuing to assess the broader impact. And it seems to be that broader impact and continuing uncertainties, especially for the broader economy, that's worrying investors. So for more, I spoke with Angus Geddes, the CEO of Fat Profits. Angus, first of all, are you surprised at the level of the tariff announcement today?
Yeah, look, I was very surprised at the level of tariffs imposed by Trump. I mean, it was really a worse case situation than that was feared by the financial markets.
Yeah, run us through why you think the market took it so badly then, because at least doesn't it provide a little bit of certainty? We now know what's going on. Or does it pose more questions?
Well, I think, there were expectations that the tariffs would come in within a range, and this was probably at the very worst end of the spectrum, and which is why we saw such an adverse reaction in US futures markets, which of course have spilled over into Asia trading today.
What do you think listed companies now need to weigh up, especially those that do business with the US?
Look, the tariffs really have created an enormous amount of uncertainty, particularly around the US economy. Companies just don't know what to expect, how to plan, how to invest. Given all this uncertainty, there's going to be a lot of question marks over supply chains in terms of sourcing goods and imports into the United States, and of course a lot of those input costs that a lot of companies rely on that come in from outside the United States are going to be hit with tariffs and higher costs. So the playing field is very uncertain, and of course there's a question mark now over where the US economy goes from here. Does the US economy now enter a recession?
What do you think then this means for investors, especially those who have seen their shares plummet in the past month or so?
Look, the market always gets through these types of events, and I've got no doubt that we'll pop out of the other side of this sell-off at some point. But for now, certainty prevails. We're going to have to sort of live with the volatility. And just the uncertainty of the trade policies coming out of Washington, which is it's going to be ongoing and it's going to impact markets.
What about you as an investor? Are you worried about the outlook?
Look, I'd be more worried if I was a US-based investor in US companies, because at the end of the day, these tariffs are going to have to be navigated by a lot of these companies, and also the United States could end up getting a lot of inflation. And the inflation could arrive at exactly the wrong time if the economy is turning down and it stops the Federal Reserve from cutting interest rates. Whereas I think international equities could perhaps do better in this environment because inflationary pressures are going to be less. and that gives central banks around the world a lot more scope to cut rates.
We've spoken a lot about the negatives, but are there any silver linings?
I think one of the biggest casualties, apart from the stock market on Liberation Day, was the big drop in the US dollar. And if the US dollar continues to go down, and a lot of these isolationist policies being pursued by the US are really having a detrimental impact on the US dollar, then that could mean a lot of inflation for the United States. But on the flip side, it could make commodities, resources a lot cheaper for a lot of other countries around the world, that rely on commodities as imports. So in other words, Australia could do better if we get a continued weakness in the US dollar, and that flows through to higher commodity prices and higher resources.
And finally, we heard from the Reserve Bank this week, leaving interest rates on hold. But does this change the nature of when to expect another rate cut in Australia, or the potential for maybe more?
I think this all but guarantees the next rate cut from the RBA to come straight after the federal election in May. But possibly also the RBA is going to be in a position where they can put through more rate cuts, later this year, particularly if the global economy clouds and we have this uncertainty around the business, the global economy, and that flows through to Australia. I think the RBA won't hesitate to cut interest rates.
That's Angus Geddes there, CEO of Fat Profits. Don't forget, if you enjoy the podcast, give it a review or a rating on Spotify and Apple Podcasts, and to click subscribe.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.